The coronavirus outbreak has had a big impact already on the world economy.
That's right. There's breaking news about that with the Fed doing a surprise rate cut this morning. We are talking with our money expert about coronavirus, the markets, your investments. Oh, so much to talk about, Bruce Helmer. Why don't you tell us first what the Federal Reserve did just within the last 20 minutes or so?
Yeah, I thought I was going to surprise you guys with that. They cut rates by 0.5 point. Nobody saw that coming. It's in response to the economic impact of the coronavirus. Then people,
that's a big
deal.
Cut.
Yeah, that's a big cut because we were thinking probably a quarter point. Yeah, but they went 0.5 point. But again, when you think about it, when you think about travel, you think about leisure, you think about entertainment, these industries have got to be impacted. People are going to hunker down. They're not going to want to get on airplanes. They're not going to want to go to Disney World. And the second largest economy in the world, China, is basically kind of shutting down. That's going to have ripple effects. Now, all that said, don't panic because stocks are a long-term investment. And whenever we've seen these outbreaks before, I think of the Zika virus and SARS and some of the others, the economic impact has been very short-lived. And at the end of the day, from the beginning of the outbreak until the end, markets have actually gone up. So I don't want to trivialize this. This is a health issue, and the safety and health of our citizens is top priority. But economically, don't let this freak you out. We're going to see volatility for sure for a while.
That's the one thing. You look at the rate cut, and then you see what the market did right after that.
Yeah, we talked about it before we went on the air. When I'm sitting in the green room watching it, it went from the first time I looked down 150 on the Dow to up 350 to down, and Jason said right now it's up again.
We're up 105 right now, but it's been all over.
It's been all over the place this morning.
Bruce, what advice do you have for people to sort of power through this volatility? And I want to say advice, sort of psychological advice, because it can be hard to weather through that.
I know when markets are down, people want to look at me and say, don't tell me to just stay the course. We got to do something. But honestly, stay the course is the right answer. If you're properly diversified, if your portfolio made sense before a week ago Monday when the markets were at an all-time high, it doesn't suddenly not make sense 8 days later just because markets are down. But it is a time to reflect and look. Are you properly allocated? Are there asset classes that will do well when stocks don't? And the answer is that there are. And there will even be certain stocks that do well right now. The vice president talked about 3M making these masks to protect us. There's certain industries, healthcare industries, that will do well, because of this outbreak. So there are opportunities, and there's also planning opportunities. Interest rates are really low. Maybe you can restructure some debt. Maybe you can refinance your mortgage if it's at a high rate. So there's actually positive opportunities among all this negative stuff.
Looking at point drops and raises, I think can be challenging.
That's a great point, Jason. So when people see that the Dow went down 1,000 points, they lose their mind. My phone rings, not from clients, from the media asking for interviews. But we always look at it as a percentage. So last week the market was down roughly 12%, and that's a lot in 1 week.
Yeah.
But on yesterday, it went up 5%. It made 5 of that 12 back in a single day. So don't get too hung up on the points, 1,000 points, 1,200 points. We look at the percentage, but again, to your point, Heather, think long term. Stocks are long-term money, and if the money is not long-term, it shouldn't be in stocks in the first place. And finally, and I know we're running out of time, even with the bad week yesterday, if you've been in the market for a long time, you didn't lose money, you just lost some of what you'd earned the previous few years. Right. You're still in really good shape compared to where you were, say, a decade ago.
Right, and you just lost of what maybe you had at the fall of last year.
Correct.
So. All right.
Bad deal if you put a bunch of money in the market last Wednesday, though.
That was bad timing.
Yeah.
All right, Bruce, thank you.
Thank you.
You can see Bruce here on Mid-Morning every Tuesday. You can get more financial advice on his show. It's called Your Money on WCCO Radio. It's on Sunday mornings at 8 a.m.
Well, along with